So we'll be going over IRS Form 1099-NEC, non-employee compensation. So more and more people that are used to a W-2 arrangement for employees are finding themselves being paid as individual contractors considered to be self-employed individuals and receiving their pay or their income statements in the form of IRS Form 1099 NEC when they might have otherwise expected a Form W-2. So in this video, we're going to walk through this tax form so you can understand what it is that it's telling you and how you can report it on your tax return. So on the left-hand side is the information for the payer. A payer could be someone that was your employer. You could have done some part-time contract work for that person. But the general requirement is they paid you over $600 in the given tax year for goods and services that you provided. B, they sold you $5,000 or more of consumer products for you to resell. So I don't know, $5,000 worth of vacuum cleaners or encyclopedias, whatever people sell as independent contractors nowadays. And then C, anyone for whom they had to withhold federal income tax due to backup withholding rules. So that payer's information is going to be up here in the top left corner. Their taxpayer ID number, which should never be truncated, will be right here below it. Next to the payer's ID number is going to be your taxpayer ID number. So for most copies of this form, it will be truncated. However, the copy that gets submitted to the IRS, this nice red copy, it will never be truncated. So your full Social Security number is reported to the IRS to reconcile your income. There are also copy 1 and copy 2 for state tax purposes. If you live in a state that does not have a state income tax, then you probably won't see copy 1 or copy 2. So before we get into much further into this form, I should clarify exactly what non-employee compensation is. So according to the IRS, non-employee compensation meets 4 conditions. So someone made a payment to someone else who is not an employee. They made that payment in the course of trade or business. This could be government agencies, it could be nonprofit organizations. It could be payment to an individual, partnership, estate, or a corporation. And it could be at least $600 during the course of the year. If the compensation or the income or the payments, however you describe it, meet those 4 criteria, then the IRS expects that to be reported as non-employee compensation. So in our article, we do get into a little bit more depth on specific examples that the IRS holds to be examples of non-employee compensation, and then other examples of income or payments that are not considered non-employee compensation and where they might be reported instead. But non-employee compensation generally for individual taxpayers are subject to self-employment tax. So if you receive non-employee compensation, you'll have to report that as such on your tax return. We'll get to that when we get to box 1 in a moment. Right below the taxpayer ID numbers, you'll see your complete name, address, city, state, and zip code. It should be accurate based on your records. If you have changed either your personal address or your business, you should notify the payer. You should also notify the IRS. We'll put links in the show notes for forms that you would file to update the IRS on your address. Below this field is a field for account number. This probably will be blank for most people unless there's some sort of a payroll service or some sort of accounting service that sets up account numbers for various business expenses, in which case you might see some sort of number that probably won't make sense to you but has a business purpose for the other side. So on the right-hand side, there are 7 information fields. We'll go through them fairly briefly. It's not that complex. Just make sure that you're reporting that this is information for the correct calendar year. For John Doe, we listed $5,000 of non-employee compensation. So this could be professional service fees. This could be payments for services, commissions, independent contractor fees, taxable fringe benefits for non-employees. It could be any number of things, but how you report it on your tax return kind of depends on what your status is. If you're a sole proprietor, or if you're an individual with a different job and this was a side gig, you would report this on Schedule C of your income return. This is profit or loss of your own business. Technically, if you don't establish a business, then you're a sole proprietor for this side hustle type work. And you would also need to file Schedule SE, which is the schedule that helps you calculate self-employment tax. So I'll stop right here and discuss briefly self-employment tax. So in a W-2 situation, when you're an employee of a company, your taxes are calculated based on a certain percentage of your income for Social Security. So 6.2% of your income up to a certain wage base, which is the limit for that year, is taxed for Social Security. So that's withheld. The employer also withholds 1.45% of all of your compensation for Medicare tax. So that's your side of it. They also do the same thing on the employer side. So the combined amount is 15.3% of your income generally. That is split between you and the employer. If you're a non-employee or if you're a self-employed individual, then you have to do both. So you're responsible for your side as the employee. You're also responsible for the other 7.65% as the self-employed individual or your own owner. You are your own employer. So that's the difference. That's the cost that the company is kind of trying to push onto you. And in some situations, it's warranted. In some, you may think that that's not correct. And if you don't think that's correct, there's a form that you can complete and file with the IRS to get a determination. We'll put a link to that in the show notes. It is a long and drawn out process, so it does take some time, and it should be something that is only that you only do if you're working, if you've been working at a job for a long time, you have a lot of documented history, and you can point out examples of where you think you should have been treated as an employee. All the forms and everything that we mention in this video or that we mention in our accompanying article, I'll put links to in the show notes. So box 2 basically is a statement that they sold you at least $5,000 of consumer products for resale. I jokingly said vacuum cleaners and encyclopedias because that's what door-to-door salesmen used to do back in the 50s and 60s. But this could be any type of arrangement that you might have, like a consignment sale of some sort. If you're running your own shop, and someone direct sold you $5,000 worth of stuff to resell, again, you would report that income and loss, the cost of goods sold, on your Schedule C. If you're an S corporation, you would report all of this on your Schedule K1 of your IRS Form 1120S. If you're a partner or in a partnership, this would be on your Schedule K1 of your IRS Form 1065. Now, as I was saying about self-employment compensation, you are able to take a deduction for that self-employment taxes that you made to yourself or made on your own behalf. You can deduct that on Schedule 1, or at least part of that. So we'll put a link to that in the show notes. Block 3 is reserved for future use, and then Block 4 is the amount of federal income tax withheld. This would be zero unless you're subject to backup withholding rules. So if you're subject to backup withholding rules, it's because you did not provide your taxpayer ID number to your employer. So this would be a good opportunity to do that so that you're not subject to backup withholding. And in this case, I believe it's a flat rate of 24% that they're required to withhold. So of this $5,000 payment, they had to hold back $1,200, which was 24%. It doesn't matter what tax bracket you're in. That may be too much, that may be too little. That's what they're going to withhold. In lines 5 through 7 are two areas for state income tax information. So I use this example with the state of Texas, which is one of the states that does not have an income tax. However, this could be any state that does have one. And what you would see in fields 5 through 7 are the two-letter abbreviation for the state. If the payer has an identification number as part of the registration with the state, you would see that there. And then you would see the state income. So this is how much tax was withheld that got remitted to the state. And there's room for up to 2 states. So some states have arrangements where I think New York and New Jersey, if you live in New Jersey and you work in New York, you're paying state income tax to both. I am not 100% sure about that. I live in Florida where we don't have to worry about that. But if you have 2 states withholding tax, then you would see 2 different states information in here. So that's IRS Form 1099 NEC in a nutshell. A little bit of background information on why you might be receiving this instead of a Form W-2. But we do cover this in a little bit more detail, including examples of non-employee compensation, examples of what the IRS does not consider to be reportable on this form, and a little bit more detail on some of the other information fields. So if you want to read this in more depth, check out our article, which you can find on teachmepersonalfinance.com. Simply go to the website, type in IRS Form 1099-NEC in the search bar, and you'll see our article. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our channel. And if you have any questions, comments, or if there's a video that you'd like us to produce in the future, please post a comment in the comment section. Thank you very much and have a great day.